Thank you for tuning in to another edition of the Vulcan Report. As you can tell, so far this week, the market has been moving rather nicely with the post-scan swing VIX indicators. You can tell we're in a nice uptrend channel here, and we have reached initial profit target status around this 88 to 90 range. So we're pretty much here now. So for Friday, normally we have what I refer to as Take Back Friday, where the market, if it's been up all week, will give back some gains due to profit taking ahead of the weekend. It's not always the case. You can have massive movements on a Friday, up or down. Being that the momentum is now locked in, it re-locked in on yesterday's trading, the bullish momentum, where there's accumulation going on at the top. Doesn't mean that it'll stay locked in, but we did lock in here. The last time we had a failed lock-in was on October the 28th, where we locked in. See the bullish line here. It didn't stretch out like this one, even though the market still retraced somewhat. But you can see we had another 2 days and then a correction. Then we locked in here, but when it came off, when we lost that lock, we moved sideways for 2 days, really 3 days, and then we corrected hard. Didn't lock back in again until Thursday's trading, even though we broke out into new highs. Okay. So, a lot of indecision up here at these lofty levels. These are new all-time highs. And like I stated before, the market really isn't acting normally around these levels. So the two things you have to look for in a bull market, you look at your trend first. We're in a bullish trend. Bull, the little green bull at the bottom right-hand corner. So we're in a bull market. So what do you look for? You look for either strong momentum locked in, which is what this usually means, and or a positive swing VIX to get hold of. One of the two is going to lead you to normally to break out to the new highs. That's what you look for normally. As you can see, the market, even though it's been trending higher with corrections around the way, this is a nice little long correction. Now we're exploding out, building up pressure here, and then we explode out. The support now is down here, okay, at around the 1750 level. So we have a nice amount of bullish momentum built in now. Even if the market pulls back inside a volatility band, it's still bullish. Now, what is it that we don't want to see? Well, we don't want to see the market drop below the 1690 trend line support, which is so far away from, you can say it's 100 points away. So that means the market can correct substantially and still be bullish. Also, the trend line support is above what? The Kumo cloud. So you basically have so much money locked in and committed to the upside that any correction at this point should be minimized. And we expect at the end of the day for it to be accumulated. Just like here. Back on September the 19th, when we started that massive correction, what happened? We remained bullish. Okay. We dipped for 2 days. We spiked below it on the October the 8th. Then we closed below the trendline support on October the 9th, but locked right back, exploded on October the 10th, and relocked in bullishness and just ran. Pretty extraordinary. Let's look at some past behavior real quick. As you can see, the S&P tends to lock in and lose its momentum. Why it does that, beats me, but it does. Quite choppy, isn't it? Look at that. Amazing, isn't it? Alright, so for Friday's trading, here we go. Top side, breakout buy trigger is at 1789.5. Sell short is at 1783 even. Okay, you reverse and get short and ride the profit taking wave to the downside at 1783 even. You will accumulate and you will play the continuation pattern at 1789.5. Okay, so that's where we are with that. Alright, this here is a picture of the Nasdaq 100. Okay, it's a chart of the Nasdaq 100. Totally different scenario here. As you can see, we tried to lock in some downward momentum, only to edge higher, spike above the volatility band here after a long sideways move. Okay, it's moving totally different than the S&P, as you can tell. Alright, now here's the funny thing. Even though looking at the chart you can't really tell this, but the trend line support is almost 200 points away, and it's well above the Kumo cloud here. Okay, sideways movement all the way, and then we explode higher. So a little bit trickier on this one. Not as bullish, not as strong. But we had the same thing in 2007, 2008, when the S&P and the Dow was hitting new highs. The Nasdaq was not hitting new highs and was not participating. Once again, the S&P and the Dow was hitting new all-time contract highs in 2007, 2008, and the Nasdaq was not. That was a telltale sign that we were going to have a massive crash, massive correction. Alright? Regardless of what was happening in the economy. If you knew nothing about the economy, you knew that that was going to come. And it was going to be sharp and substantial and scary. And that the rally was fake. Well, I'm here to tell you the same thing is happening and shaping up now. The Nasdaq is participating more this time around. But still, it's not participating like the Dow and the S&P and the Russell. They're hitting new all-time contract highs once again, which means they're trading higher today than they were in 2007, 2008. The Nasdaq is not participating. It's still not hitting new all-time highs. However, it is trading higher than it was trading the last time around in 2007, 2008. Alright, so you have to remember that. Pause for the cause. Eventually, this father of all bull markets will end someday. We don't know when that will be. But I do believe that this is the father of all bull markets. Like I said a year ago, I predicted that the market was going to hit all new all-time highs and run and make the bull market of 1990s and 1929 look pale in comparison. I still believe that, and I see it happening. The music will stop one day, but right now, who knows when that will be. We could see Dow 20,000 before this thing has any type of correction. So what do? Sideways, during sideways consolidated congestion times, you have no choice but to day trade the market with very small stops and reverses, taking both long and shorts. That's all you can do. By doing so, you break even pretty much until you get a breakout or breakdown. That's the way I play it. The other way you can do is you could sit out of the market. But remember, staying on the sidelines costs money as well. It costs money because of opportunity loss. Alright? There is a cost for opportunity loss. You can't win if you don't trade, or at least have some type of price point projections that you're waiting and looking for to get into the market. If you don't have any tickets working when the markets break out or explode higher or crash lower, then you're not going to participate. You're going to miss out, and you're going to find yourself chasing the market. So you always want to have something going on. All right, Friday's trading, the Nasdaq long at 34 and a quarter, short at 34.01 and a quarter. Again, long at 34.17 and a quarter, short at 34.01 and a quarter. So tight scenario there, but you got to do what you got to do. All right, here's our crude oil chart. As you can see, we are still bearish. We're still well below the Kumo cloud. We're still well below the trend line resistance, and we just keep edging lower. We got some positive pulse waves along the way, but nothing substantial or significant. Notice that the pulse wave, though, is making new highs. Okay? It's not making new lows. However, the price is making new lows. Still have a bearish divergence. It looks like here that the swing VIX wants to turn and head down now. So we could be setting up for the next leg down here in the crude oil. Okay? Is it possible that price could turn and start to head higher? Yeah, but not likely. Let me give you an example of why that is the case, why I believe that. Okay, notice here the swing VIX was hitting lower highs and lower lows. Lower low. Okay, here and here and here. Price eventually started to catch up with it. Okay, same thing here. Look, lower highs and lower lows. Okay, now you try to break away, you hit this high here, and you got a higher high. Alright, this low is slightly lower than that low. So some transitions, some pausing for the cause and thinking. Are shorts going to take profit off the table and cause a scenario like this to happen where the swing VIX goes up like this and starts an up channel? Because the swing VIX is already up. It's already positive, but price action is not. It's just going sideways to slightly negative on a positive swing VIX. Again, positive swing VIX, lower lows. Okay, price diverging from the indicator. Are we going to lock in now? And are we going to see something like that happen? We are at a crossroads. Okay, Thursday's price action ended with the negative momentum coming off. Okay, see, we were off now. All right, and it looks like the indicator here, the swing VIX, wants to head lower. Very interesting to see how this crude oil scenario plays out. Okay, Friday's trading. You're going to want to see a long at 94.52 and a short at 93.47. All right, those are your price trigger points for Friday for the crude oil. Also, it's going to be switching over to the next month contract. I'm probably going to start looking at that come Monday. So Friday will be my last day operating in the current front month. I don't remember what the front month is. That's funny. But I know that as of like a couple days ago, I had like 7 days left to trade. So usually it's time to. What I usually do is I'll set aside until more open interest kicks into the next contract, what's going to be the new front month. Before I do that. So that's just FYI. Alright, here's gold. Gap up on the gold, you guys. Gap up on Thursday, and we closed higher. Bearish momentum came off. Swing VIX has been undecided at this point. Technically, it's still a negative swing VIX. Does it want to try to go positive like it did here? It's trying. Who knows? Price action and the indicator are diverging from one another. We are consolidated technically. We're trading inside the volatility bands here and here. Here, okay, and here. and we're below the swing VIX. I mean the Kumo cloud. So indecisive. We still don't know what we're going to do here with this gold yet. Only thing I can say is try to day trade it. So for Friday's trading, long above 1294.60, short below 1267.60. Alright, finally, looking at silver. We have another red alert on the silver. As you can see, on Wednesday's trading, we had another black candle here. Alright, now that normally means that the market is at a support zone. Okay, last time we were at that support zone, I gave the red alert. We had a support at 2055. Alright, support zone 2055. What happened? We crashed. Alright, next support zone is at 2055. I'm sorry, not 20. Where am I? I'm sorry. Ignore me. Let's see, 2055 here. Give me a second. Just had a brain meltdown situation going on. Hold on, let's see. Let me give you the correct numbers. Okay. On November the 7th, that red alert I gave you, that was at 2136. Alright, now the support red alert is at 2042. So 2042 is going to be the next breakdown support price trigger to short the silver. Now, on an intraday basis for Friday's trading, this is where you're looking to get in. Alright, on the top side, long at 2090. On the bottom side, short at 2073. Okay, that's for the day trading on Friday. I don't see us getting anywhere on the top side per se. I think we're setting up for the next leg down, and it should be a doozy. It should take us to this 1950 level. Alright, but a trade is a trade. The system is the system. So long at 2090, short at 2073. Very tight ranges, I know, but that's all you can do, is to trade what you see. And just also remember this 2042 support area, which if we trigger below that, that should send us directly to that 1950. So the crash has been underway, as you can see, for over a week now. Okay, and at this point, the market's going to look for a bottom. That 1950 could be our bottom before we actually reverse course and start the beginnings of a bull cycle. So we'll have to see. Exciting times now in the metals to see what we're going to do. So remember, take what you can, give nothing back, and everyone have a wonderful weekend.